Hello investors, this is Stuart Cruz with Cruz Asset Management's video chart of the day, and today we have to be talking about a couple of milestones that we've hit. So the S&P 500 just hit an all-time high, closed an all-time high yesterday of 33.98, spot 41. Broke the previous highs of February 19th of this year after that humongous sell-off in 33 days, down 36%. You can see that right here in this chart of the S&P 500. Now, if I put on this chart the PE ratios over the last 10 years, you can see how the PE of the S&P 500 has climbed considerably, and its average PE over 10 years is just under 20, and we're trading at 22, so a good 10% higher. We have traded higher in the past, and let's say if I were to go back into the 2000s and prior to that, during the post.com craze, we traded much higher, but these are not good indicators of what you want the PE ratio to be at above in the 40s and whatnot. Let's go back to a 10-year chart. I'm going to take off the PE ratios and look at the S&P earnings. So as you can see, this orange line of the S&P earnings, the S&P itself pretty much follows the earnings, right? The earnings had to sell off, the S&P kind of traded down a little bit, flattened out. Earnings were projected up, S&P went up, and then right now we're pretty much right on top of this as the S&P traded off as the earnings fell off. Okay, that all makes sense. Now the S&P has rallied because it is a forward indicator. 6 to 9 months, it's a forward indicator, forward discount mechanism. So if you do not see these earnings rally sharply, you could definitely be in for a sell-off. Now, I'd be remiss not mentioning the second largest activity that happened today. The S&P, the largest component of the S&P is Apple. This is market cap weighted, so the largest stock within the S&P 500 gets weighted the largest, and that stock is Apple. So if I put Apple up on the chart here, we're going to show you a price of Apple. Apple hit 468, and I'm going to put market cap up on there because here is the biggest indicator, $2 trillion. The first company to reach $2 trillion, and it was over $1 trillion, looks like just a little bit over a year and a half ago. Hit 1 trillion for the first time. So not that long ago, and then didn't take very much longer to hit $2 trillion. But just like in the S&P 500, what was responsible for that rise was market cap. So let me take off the price of Apple. I'm sorry, the market cap hit 2 trillion. PE ratios were the responsibility of this. So you had expanding PE ratios. Now the Apple PE ratio is averaging around 16. And it's currently trading at 35. So the 10-year average is half of what it's at right now. So I'm not saying it can't stay up here, but Apple's going to require a lot of growth in order for it to maintain this $2 trillion number. And typically a 35 PE is just not sustainable. Okay, so why all this sudden rise? Well, it could be the fact that we're getting used to the coronavirus. And so here, again, another milestone. We're looking at the coronavirus. We're almost at 5.5 million cases of coronavirus. And I'm going to put the death rate on here. We're at just over 170,000 deaths so far in the coronavirus. Now keep in mind, 170,000 people is a lot of people, of course, but it is less than the number of people that have died due to heart disease so far this year. So keeping things in perspective, it is problematic, but it is certainly not any more dangerous than other things that we have to deal with in our ongoing lives. So traditionally, around 3 million U.S. citizens die every single year. And so this year, because of coronavirus, maybe that will be an additional couple hundred, 250,000 by the end of the projections, if the projections hold true. But that relative to the 3 million that traditionally die is really just an increased fraction. It would be, I'm not saying the coronavirus is like the flu, but it would be like a very heavy flu season that would cause increased deaths. So I'm going to show you cases per day. So for a little bit of a good news, here you see the cases per day. When we went in our lockdown, they fell down. When we came out of our lockdown, they dramatically increased. And now obviously cases per day are coming down. That could be a result of potential herd immunity, because if we look at the coronavirus cases, again at 5.5 million, we're estimated for every case there's another 10 people out there exposed. So that would mean about 55 million people in the United States have already been exposed out of a population of 330 million. So you're looking at 15% of the population exposed to the coronavirus already. So that's starting to put an impact into the ability to spread. And of course, masking and social distancing help that along the way. So here we have, again, deaths per day have dramatically rose in the beginning, and they sold off a little bit. Sold off is a stock term, but they came down, and you've had some dramatic swings, but it looks like they're leveling off quite a bit. And I'm going to put the death rate on here as well. You see the coronavirus death rate kind of maxed out on cases per day at around 6. This was in the very beginning when we were getting used to it, and the reporting probably wasn't as good. And now it's coming down to about half that. That does not mean that that doesn't mean that 3% of the people that catch coronavirus or exposed die, because if the estimate is about 1 out of 10 actually become a case and go into the hospital, then that death rate, the actual mortality rate, is 1/10 of that, so maybe 0.3%. And the flu is about 0.1%. So again, not saying coronavirus is the flu, but I'm saying the death rate is comparable to flu and pneumonia. Again, not something to be ultimately feared unless you have a comorbidity issue, but that's what we're looking at along the lines of maybe a little bit more powerful than the flu. Certainly not anywhere near as what SARS or MERS were, where that mortality rate was in the 20 and 30% range. Okay, we're looking at 1/100th of that, really. Okay, so what does the coronavirus have anything to do with this? Well, I think as we get used to these numbers, as you see the death rates come down, as you see the cases per day come down, as we're looking at that, as we see some of these numbers work its way into the system, then we get more used to basically reopening and more or less living with this and anticipating we're going to get through to the other side of this, which is why the S&P is at all-time highs, Apple's at an all-time high. Now, what could derail us? Well, the normal things that I talked to you about. So right now, I'm going to put unemployment up here. Unemployment line we have here. This is a since back from the 50s, so this is 70 years of unemployment data. The long-term unemployment average is a little bit under 6, 5.75%. We're at 10, so a little bit, almost twice that normal typical average. And if you look back here, we're at numbers greater than we were at the financial crisis. We're slightly below the worst unemployment levels we saw in 1982 and worse than any other time in the last 70 years prior to the Great Depression. So we have a long way to go before this unemployment works its way out into the system. And if we look at our U.S. GDP, as we add that in, we hit a max of around $21.75 trillion, and we're down to 19.4. So you can see a nice steadily rise in GDP and then a big sell-off. So if I change this panel to off the highs, that is a 10% off, 10.75% off of our all-time GDP highs. So those two things could derail us. So basically what I'm saying is we have highs in S&P, high in the largest market cap weighted component of the S&P, which is Apple, just hit $2 trillion, which is at all-time, not all-time, but extremely high multiples. And if we don't see earnings in the next couple of quarters that follow through, because clearly this chart, I'm going to put on the S&P 500 and the earnings of this chart. Clearly this chart is going to show that if we don't see earnings follow through and snap back as quickly as we saw the S&P rebound, you might see multiple compression and you might see a sell-off again. But for right now, the party looks on with the S&P 500 and Apple leading the charge. So this is Stuart Cruz with Cruz Asset Management's video chart of the day, and I look forward to seeing you tomorrow.